Welcome to your weekly roar, where we break down what actually matters, cut through the noise, and give you something you can use right now. I'm Dustin, and today we're diving into something we've been writing and talking about for a very long time now. The future of banking is moving onto crypto rails. We're doubling down. We got a lot of feedback. Guys, out of all of the shows we've done, we got the most feedback from this topic of any show. And so we're doubling down on it. Some of the feedback, people are questioning what we're saying. And I'm just saying that this is not hypothetically happening anymore. This is not happening someday. Guess what? Doubling down, it's right now. So if you've ever wondered why stablecoins suddenly seem to be everywhere, from banks to governments to payment companies to institutional finance, this episode is for you, because what's happening underneath the surface right now may be one of the biggest infrastructure shifts in modern financial history. Let me go ahead and just move and say it is the greatest shift in financial modern history of all time, big time. Let's get into it. Brandon, take us over.
This week's Spark is simple. Most people still think crypto adoption means consumers buying Bitcoin. That's true. I've had those conversations. That's not the real story anymore. The real story is the financial rails underneath the system are being rebuilt, and stable coins are at the center of it, quietly, fast, and at global scale. What's wild is that this isn't just coming from crypto native companies anymore. It's coming from the institutions themselves. MasterCard is buying stablecoin infrastructure companies. That was reported by CoinDesk. S&P Global says banks are pursuing stablecoin settlement strategies. Axios says the Federal Reserve is openly discussing frameworks for crypto and fintech access to payment systems. Fifth in London said, and global regulators are moving towards 24/7 tokenized settlement infrastructure. That's not experimentation anymore, folks. That's alignment. And for years, the banking system operated on delayed settlement, business hours, correspondent banks, multiple intermediaries, wire delays, settlement friction, cross-border fees. But stablecoins changed the equation because they introduced something the old system never had: internet native money, programmable settlement, 24/7 transferability, near instant movement of value. And once institutions saw that this could reduce cost and increase settlement efficiency, the conversation changed, because this stopped being about crypto culture and it started becoming about infrastructure economics. So the quick take, here's the thing that most people get wrong. People think stablecoins are competing against banks. No, it's not true. Stablecoins are becoming the new plumbing that banks will run on. That's the shift. Banks don't actually want slower settlement. Banks don't love expensive correspondent rails. Banks don't want trapped liquidity sitting idle for days. The current system is inefficient, and institutions know it. That's why stablecoins are increasingly being discussed as settlement layers, especially for cross-border payments. That's reported by Forbes. And honestly, this makes perfect sense, because cross-border finance is still incredibly broken, slow, expensive, opaque. One report this year pointed out that traditional correspondent banking can still take multiple days and involve several intermediary banks, while stablecoin settlement can happen in minutes, 24/7. That was alphapoint.com. That's not a small improvement. That's a completely different operating model. And institutions are beginning to line up because they know whoever controls the next settlement rails controls the future of payments.
Boom. I mean, we could end there, but we're not. Before we get into this next part, this might be a good moment to grab a coffee or reset for a second, because what we're about to get into goes a layer deeper. All right. The deep dive. So let's really unpack what Brandon just said is happening here, because there's a reason stablecoins are suddenly everywhere in institutional conversations. There's got to be a real reason, right? Efficiency. And that's the answer. The current banking system was built for a different era. It was a pre-internet era. Think about that. Pre-internet. pre-AI, really pre-phones, pre a lot of things. A world where markets closed, payments stopped overnight, international transfers moved slowly, and settlement happened in batches. I mean, think about that alone. The modern economy does not operate like that anymore. Commerce is global. Markets are real time. AI systems are emerging and they need support. AI systems need support. They're, let's be honest, they're probably the next 3 trillion users of the internet. Digital businesses operate 24/7 now, and suddenly the old rails look ancient. And that's why we're seeing major institutions move right now. They get it. Like Congress isn't going to stop it anymore. We've got the Genius Act, and stablecoins are got a free run. We've got the Clarity Act. Boom, we're done. MasterCard's acquisition of BVNK wasn't random. Analysts specifically described it as integrating stablecoin rails into mainstream payment infrastructure. CoinDesk reported that. And payments.com reported that Anchorage Digital is now enabling international banks to access stablecoin rails for cross-border settlement. That's now, that's not later. Fifth in London says UK regulators are actively discussing near 24/7 settlement systems and tokenized financial markets. And let's be honest, the EU has been hating on crypto forever. This is radical change, guys. Radical change. Regulators globally are accelerating stablecoin frameworks because they realize these assets are becoming systemic payment infrastructure. We've already proven the point. We've already done it. We're here. And that's from the paymentsassociation.org. That matters because regulation changes institutional behavior. Once institutions feel regulatory clarity improving, adoption accelerates. And that's exactly what we're beginning to see right now. And what does that really mean? Are you going to notice that? Are you going to see it? No, you're going to notice it getting faster, better, cheaper. And guess what? It's probably already happening. So it's already down the road further than you think. If you've noticed it's working better, that's why. So crypto is not the outsider anymore. Crypto is not the great evil anymore. It is functioning as rails to make things better for your life. So hot seat question. Here's the real question you got to ask yourself. If money becomes more programmable and settlement becomes instant, what happens to the banks that still operate on delays, friction, and legacy systems? I'm actually going to double down on this because that's the real pressure point here, and it is legitimate. This is, what was that? I want to say 8 weeks ago, 9 weeks ago, 10 weeks ago, whatever, when we did the last podcast on it, which wasn't our first. I mean, we've been doing this for over 35 weeks now, guys. We've almost been at it for a year. And actually, I think we have been over it for a year, but we only have 35 we recorded here, but we've got our AMAs before. We have been at this for about 2 years, 35 weeks just on this podcast. From our first conversations over 2.5, 3 years ago in AMAs and discussions and even being on other podcasts, we have been saying from the beginning, this day would come that they're going to use it. Now we're telling you the day is already here. It was already past. It just wasn't known. You didn't know. So it's already here. What happens to those banks that are operating that way? That's literally going to be the breaking point, the pressure point. It's the friction point because this isn't now about crypto innovation. We don't need to worry about crypto innovation anymore. The innovation happened. Innovations are happening. It will continue. Is crypto going away? No, it's actually embedding and evolving. And everyone is wrapping it in. It's about operational competitiveness. And globally, countries are starting to realize that too. There's a growing concern that whoever leads stablecoin infrastructure may influence the future dominance of currencies themselves. That was in the Washington Post. So that's why this conversation has become geopolitical, not just technological. So real talk moment. Let's be honest for a second. We say that on every podcast. Let's just be honest for a second. Most people still think blockchain adoption happens when everyone downloads wallets and starts talking about crypto all day and everywhere, right? It's probably not how it's going to unfold. Infrastructure is going to disappear into the background. We've been saying this for months, weeks, and years. You won't use crypto. You'll experience faster settlement. You won't use the wallets. You'll have cheaper transfers. Now you can. You can. We invite you. We welcome you. For the next billions that come on that have not been crypto native or newbies, that's not how it's going to happen. That's why we build backwards. We build stuff in with Rails so you don't even notice. It just does things better, cheaper, faster. So you're going to experience faster settlement, cheaper transfers, instant global payments, 24/7 financial systems. And when you see those, that didn't just happen because the financial systems did it. They did not do it. The banks did not get here on their own. That is us. We, the little hacker, shadowy hacker types that Elizabeth Warren hated until she couldn't live without us. I'm just saying that's how infrastructure wins quietly. And another layer people aren't talking about right now enough, AI, because AI systems need machine speed payments, agentic commerce, autonomous transactions, programmable value movement. Stable coins are increasingly being discussed as the native financial layer for AI driven systems. And that's in Le Monde, as well as a number of other resources, and was talked about extensively at Consensus 2026. And let's be real, we're doing it. We're building there. So hang with us. That's where things get really interesting, because now we're not just rebuilding banking, we're rebuilding how intelligent systems transact entirely. Because honestly, they can't legitimately hold a bank account. They are constitutionally written out of the ability to be an agent that can hold property. So how do you make that happen in a way that doesn't break the rules? Well, that's what we're coding, right? All right. Before we land this, you almost thought you got a little sneak peek into something. I didn't do it. Did I not? Brady, I held it off. I'm just telling you. Before we land this, you can hear more of those leaks later. We have leaks. I'm
You're
very leaky
doing
today.
leaky, aren't you?
I'm very leaky today, but I'm not leaking it. Before we land this, take a second and think about how this actually shows up in your world. Because the next piece that Brandon's about to take over is where this all connects.
And that brings us to the roar. So where does this all go from here? Here's our view. The future of banking probably won't look like banks disappearing. It'll look like banks evolving onto new rails. Stablecoins, tokenized settlement, programmable treasury systems, 24/7 liquidity, digital asset custody, cross-border interoperability. And honestly, we're already seeing the early stages of this transition happening in real time. The institutions aren't lining up because crypto became cool again. They're lining up because efficiency wins, always. And once infrastructure becomes materially faster, cheaper, and more programmable, markets eventually move there. That's what history shows us over and over again. The internet did this to media. Cloud computing did this to software. Now blockchain-based settlement is beginning to do this to finance. And the people paying attention right now are going to understand the next decade much earlier than everyone else. The roar line, if there's one thing to take from this, crypto was never just about creating new money. It was about rebuilding the rails that money moves on. And now the institutions are beginning to move onto those rails. That's the real story. Our 1-minute insight, here's what this really means. Stablecoins aren't just a crypto product anymore. They're becoming infrastructure. And once infrastructure shifts, everything above it eventually changes too. Payments, banking, treasury management, global commerce, AI systems, cross-border finance, settlement, liquidity. The next era of banking may still have familiar names on the front door, but underneath, the rails are changing completely. And that shift is already underway.
Let me say this. I want to put this clear. I'm doubling down on these statements here. We're really doubling down our position. The one thing I will take back, because it was extreme, is that banks out there that don't take advantage of this just become next year's ATM with no humans. And that was a tough statement. It might not be wrong, but I'll take it back, because we welcome you here and we look forward to Roar being a part of your rails as well. So look under our hood, see what we got. You may want to be a part. If not, your AI will. That's this week's roar. If this if this hit for you, share it with someone who needs to hear it and make sure you're tapped in so you don't miss what's coming next. We've got more conversations, more clarity, and more real insight coming your way. Be sure to follow our show on the platform on which you found us. And if you like our podcast, rate and review it. It helps the value as well as the algorithms that make us easier to find. We need your help on that, so please do give us a good old rating in there. And until next time, stay sharp, stay curious, keep moving forward. This is your weekly roar. Y'all take care.